you lay me down in tall grass and let me do my audio capture. Oh, audio capture. Delete. One thing I think you should know. I'm gonna miss you when you go. Time goes back. You talk about enough. Won't you lay me down in the tall grass and let me do my stuff? Bow, ba-dum, bow, bow. All right. Hey, how we doing, everyone? Check it out, Brian's here. Hey, Brian, what's happening? Hey, Doc, way over there, huh? See if I can get this thing right. All right, that looks about right there. Lucky Larry, how's it going there, Mr. Lucky Larry? I gotta turn the camera around so you guys. There we go. And we're good to go. All right, this is ready to go. Start streaming. Manage broadcast. Give me a few seconds. Oh, Brandon's here. Brandon, what's happening? Nancy Gonzalez, how are you doing this evening? Not made for children. No, it's not bloody made for children. What a bloody hell you thinking about there, laddie? Time goes back. Time goes rough. Won't you lay me down in the tall grass and let me do my stuff? Now, I got this Fleetwood Mac song in my head. Ooh, check it out. All right, so, good evening, everyone. And hey, was that Hollywood? Hollywood, I just seen you breeze by, dude. Bamarock, I'm number 2. Way to go. Let's go all the way back to the beginning. Who are we saying hi to this morning? Secor. What's happening there, Secor? What's happening? Jose Chavez, ¿qué pasa, amigo? ¿Cómo está? Alejandro, ¿cómo está? All right. Look at all these people joining in. You wave to Brian. All righty. Guest thoughts on Coles. Ooh, first one of the evening, Coles. Okay. Yes, Coles. Well, we're going to take a gander at that. Pickled peanuts. What's happening? I sent you a message about MOD. About MOD. What's MOD? You mean becoming a moderator? That'd be cool. Bamrock, that you want? You want to be a moderator? You're here enough. We got a couple little rules about that. Oh, check this out. Is that LA Soundwave? What's happening? And Scott wants to take a look. Cisco. That was quick. Okay. LA Soundwave. Hollywood. What's happening, Hollywood? All right, so let's get the ball rolling. CSCO. CSCO is actually top of the list today, so we're going to take a look at CSCO in a minute or two. Somebody want to double check, make sure the screen is up and live on YouTube. Okay, that way we all can see the numbers and stuff. All right, so Scott, we're going to take a look at CSCO first thing. Alrighty, so Coles. Coles is not on the list, so we'll do Coles first, then we will proceed through everything else. All right, Coles, very first thing I always want to see, always is the high, the low, where was it, where is it, and what direction is it currently going? 5 things I want to see on every single chart. High, low, where was it, where is it, what direction is it going? Great. So, this is the 1-year chart. It looks interesting. I'm not at the 1-year high, I'm not at the 1-year low. All right. Let's take a little deeper dive before you do that. Let's check the numbers. 1981. I was a junior in high school. What fun I had. Yeah, buddy. All right. 1981. The 20s are going to be the closest. The 20 can get you 38 cents a share for 3 days. That is over 1.5%. Well, the cool beans. I like that. Plus, if it does go above 20 by Friday, all right, you'll also collect the 19 cents per share difference between the purchase price and the strike price. But the numbers work great. The chart looks okay. Now we're going to deeper dive and take a deeper look in the chart and see what it looks like. Yep, Bama Rock, that premium does look good, but let's take a look at the chart to see if it's the right time to buy. Just because we like it, just because the numbers look good, doesn't mean it's a good buy. I'm going to turn the air conditioner down just a smidge. All right, cooled it off a little bit. That being said, holy shit, we got 8 people over on YouTube. Cool beans, how you guys doing over there? All right, that's the 1 year chart. A year ago, Kohl's was at 28.30, bottomed out for the year at 17.63. The top of the year was 29.60. Yep, 29.60. All right, 29 something anyway. But from there, look at the last 90 days. All right, look at the movement. Up, down, up, down, up, down, up, down. Here's our 30-day bottom right here. Moving to the upside. Okay, we topped off a little here, pulling back a little bit. So that's the 90-day. Look at the movement. Up, down, up, down, up, down, up, down. So down right here. I want to get closer and look at the last 30 days. Okay, here's the last 30 days. The 30-day chart gives you a closer look, a better idea of where it should be, hypothetically, should be going in the next couple of days. That's what we're looking for. Jumping in on Monday, getting out on a Friday. So today's only Tuesday. So we're in day number 2. So tomorrow, week number 3, day number 3 of the week. We're halfway through the week tomorrow. Holy cow. Okay, our 30-day high, right here. 22.53, our 30-day bottom 3 days later, 18.54. Great, she was up, down. Looks like she's coming back down at the moment. So now I already own some Kohl's, so it's not as if I can jump out and doesn't look that good, but it is what it is. Okay, she goes up, down, down. You got to figure out if Kohl's works for you. Now Kohl's, I don't mind. Okay. It's been giving me a decent return every single week, so I keep doing it. One last thing before we move on, let's take a look at seasonality. Now, for those who don't know what seasonality means, that is basically how does a stock perform over the year. That means from January to December. Because, you know, every year, January to December, that's how we do it. So a seasonality chart all the way to the left is January 1st. All the way to the right is December 31st. This represents a whole year of movement. The blue line is this year's movement. And this little blue dot right here, well, that's today. The red line, that represents 10-year average movement. Leah, how you doing? 10-year average movement. So that's 2014, 2015, 16, 17, 18, all the way up to now. And this is what it normally does throughout the year. I love the seasonality chart because it gives me an idea of what business as usual looks like. Now, this is not a usual year, but it gives me something to look at to give me an idea. All right, Christian, it does work that way, but you have a few you can look at. MPW, Siri, Ford, Wells Fargo, see if it will work. All right, Redneck, we'll see what happens. Duran, RR for the long term. Hey, Duran, you're new here. You want to take a look at RR for the long term. Now, I'm not quite sure what your idea of long term is. Okay. Okay, now I don't know if RR means rate of return or is RR an actual stock. Okay, so I really don't know what we're talking about. You guys need to be a little bit more clear on the questions you're asking. Because some of them make sense, some of them don't. Remember, I'm looking at four channels. You get Facebook, TikTok, Instagram, and YouTube. So as the questions go here, well, the questions also go over there, the questions also go over here, and the questions also go over there. So I'm trying to keep up as best I can with all the questions. I don't want to ignore anyone or make you feel that you're I don't want you seeking a safe space. What if I don't answer your question right away? Just understand there's a lot of questions I need to answer. Jose wants to take a look at Walgreens. WBA. We'll take a look at Walgreens. Alrighty, so give me a few minutes. I will get to it. Erica, VTS. Now, CWEN, no. MFA, no. All three no's. Terribly sorry there, kiddo. But quickly, VTS. All right, I'm going to pause it right here, and I'm going to finish up with Kohl's first before I go on to VTS, CWN, all that kind of nicey stuff. Pete Blue Lime, looking for, yeah, have fun with that one. He's talking over on YouTube, they're talking about Bitcoin. Sorry, I don't do Bitcoin. Sorry, no Bitcoin. All right, so I want to take a look at the next couple of days, next couple of weeks actually. So what does normally do? Look at this. Normally 8:20, okay, that's today. At 9:05, well, that's 2 weeks away. What does it normally do? Sideways. Nothing. No big movements. No ups, no downs. Nothing to say, hello, surprise, 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 surprise. I can almost bet maybe one out of everybody here will figure out who said that. Well, surprise, surprise, surprise. All right, well, that's it for Kohl's. Kohl's doesn't look that attractive to jump into it at this moment because we get a little fish hook here. Let's call it a reverse fish hook because she goes up, a little bit of a top there, 2 days to the downside. Yeah, 2 days to the downside gives me a little bit of a queasy feeling. Doesn't say it's time to go back up. So yeah, she goes up, she goes down. She went up 4 days. You know, like yeah, 1, 2, 3, 4. Now she's coming down for a little bit. Okay, fine. I like Kohl's. I actually own some. I have no problems with it. Next, let's take a look at newcomer Erica. Erica, welcome to the show. Let's take a look at your three. Now, I said no, 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 but we'll take a look at them anyway so you can actually see why I say no, no, no. All right, VTS. VTS. Monthly optionable stock. Okay, now with stock options, you have a choice. Okay, you have call options and you have put options, two different kind of options. Also, you have weekly options and you have monthly options. Monthly options expire the third Friday of every month. Weekly options expire on Friday, every single Friday. So to do a covered call, which is one of the safest strategies there is, and that's the only thing I teach here, covered call strategy coupled with the dividend capturing strategy, if you know what that is. So you put dividend capturing and covered call writing, put them together, and then this is what we got. All right, so that being said, monthly optional stocks, I can only do it once per month, 12 times per year. Now, I tell everybody, I'm not embarrassed about the situation. I didn't go to college, but I do know that 52 is a lot higher than 12. So if I'm going to collect a check for doing a dividend covered call strategy, what I'm teaching here, if I'm going to get a check for that through a covered call every third Friday of the month, well, that's 12 times. Doesn't work for me. The numbers usually never ever work for me. I like a safe, predictable, consistent 1% per week. The only way I can get that is through using weekly weekly options. And I don't have a drink tonight, damn it. Oh well, is what it is. Let's move on. All right, VTS. No. CWEN. CWEN. No again. Another monthly. Numbers just don't work. Last one, MFA. MFA. No yet again. Now, Erica, what I'm looking for, now, you're new here, so I have no idea what it is you're looking for. What I'm looking for may be totally different than what you're looking for. So I'm 60 years old, I'm retired. The money that I have, I do not have the ability nor the desire to invest something and wait for it to go up in value. So I am looking for cash flow. I'm not looking for capital appreciation. Now, capital appreciation, I have no idea what those companies do. Okay, and the reason why I have no idea what those three companies do, because there's 9,598 companies that I can invest in on any single day. Now, I only look at 3% of everything that you can trade. And the reason for that is, rule number one, is I like companies that are consistently profitable. I cheat a little bit with this because I go directly to the dividends and I bypass the earnings reports. I bypass the quarterly reports. I bypass the annual reports because here's my thinking. If the dividend is the portion of the corporate's profits that are paid out to the shareholders, okay, you and I, when we buy and sell stocks, we are the shareholders. We are the ones that create this mess. Okay, the market maker, he just draws a line in the sand and say, hey, this is where we're starting from today. What do you guys think? Well, this is what we think. Okay, we think here it's too high, and way down here it's too low. Okay, when it gets down low, that's when we want to buy it, because you're going to make your money in the stock market by buying low and selling higher. Okay, higher is totally up to you. Now, that's all stocks do. They go up, they go down. They go up, they go down. Up, down, up, down. So the chart actually tells us when to jump in between the high and the low. So if I'm looking at the high right here, okay, if I'm looking at the high right here, well, yeah, I want to take my profits, because remember, it's not a profit until you take it. Also, nobody ever went broke taking profits. So if I bought the stock and it jumps up to here to 20 bucks, well, hell yeah, I'm going to sell it. Okay? What happens a couple of days later? Matter of fact, the very next day, look at right here. The very next day, we're down to here. So it was from 20 down to 18.60. Okay, that's a $1.40 drop. Well, a $1.40 may not sound a lot to you, but a $1.40 on a $20 stock, that's wait a minute, is that much really? $1.40 on $20 stock, well, that's 5%. Okay, still, I would have taken the profits. But here's the thing. Once it hit the bottom, okay, I like 2 days to the upside. 1, 2, before I would jump in and go for the rest of the way. Now, if I jumped in and go the rest of the way, well, I'd do a covered call against that, grab that 1% that I'm looking for. Well, where do I find the 1%? Here's my purchase price, $19.48. We get the closest ones, we do $19.50. Well, it's only going for 11 cents. Well, that's 3 days away. Okay, it might not look that desirable, so let's not do that one. Let's look at next week's. Now, next week is the 30th of August. See the dates? 23 August, well, that's this Friday. It's 3 days away. Okay, 30 August, well, that's 10 days away. So, 10 days away, the 1950s are going for 21 cents. That's over 1%. That's what I'm looking for. All right. So, Erica, I'm terribly sorry. Your 3 that you asked me to take a look at, no. Now, like I say, I'm looking for cash flow. I'm not looking for capital appreciation. I'm not looking to buy a stock, wait 3 or 4, 5, 10, 20, 30 years, and wait for it to go up in value. Sorry. You know, that's a young man or young person's game. Or someone who has more money than me. Because the money that I have, I need that 1% to pay all my bills on a monthly basis. So, I got 47 more questions. Let's roll through them. Oh, look at that. Oh, no, come on. 4 people got it? 4 people got it. Gomer Pyle. Well, hello. Howdy. Okay, I'm assuming all you people know that was Gomer Pyle. You probably all know who that was. That was Jim Neighbors. Yep, I am old enough to remember all that. We're all showing our age. Hey, I got no problem hanging out with people my own age. Okay, just as long as they're not. It's okay to be physically old, but mentally, hell no. I'm still a child. People keep telling me, grow up. Well, I've never been 60 before. I'm not quite sure how I'm supposed to react. Did some calls on coin look sweet? Stavos, cool beans. Erica, you're welcome. Erica, what I'm looking for, it might be helpful to you, okay, if you're really interested, because this is not for everyone. This is slow, this is boring, this is tedious, monotonous, aggravating, time-consuming. Not really time-consuming, 10 to 15 minutes a day. But the funny thing is, I found that people spend more time planning a weekend outing, okay, like a weekend picnic or a weekend to the beach. They spend more time spending that than they do on their personal finances. I'm not going to make it through the night without something. No cough drops here. Well, let's see how these things work. Maybe they'll work. Maybe they won't. All right, as we progress. So, Erica, what I'm looking for basically, now this trading strategy was created for my 9-year-old daughter when she was 9. Okay, had to be simple, safe, predictable, consistent, and no way that she could lose. That's the 5 criteria I need to overcome in order to create this trading strategy for her when she was 9. This was back in '08. Okay, so simple, safe, predictable, consistent, and no way to lose. 5 rules came along with that. Rule number 1, and this is like one of the okay, that's why it's rule number 1. It's one of the biggest ones. Never buy something you do not understand or you do not want to hold for a long period of time. Okay? If you cannot give someone a 30-second elevator pitch as to why you bought it and why you think it's a good investment and why you're okay with holding it for a long period of time, well, then you probably shouldn't buy it. Erica, those 3 companies you rattled off, I have no idea what they do. Really, I don't. Let me give you a sample of what I'm looking at. I gotta wait for that to open up. Give me 1 second. Patience is a virtue. All right. Now, Erica, this is what I'm looking for. You let me know which one of these doesn't sound familiar to you. All right? Ally Bank, Aon, DHI. I don't know who DHI is. I don't know what they do. Seriously, I don't. But it's on my list. And I'm going to explain to you why it's on my list in a couple of seconds. Siri, Visa, Wells Fargo, Moody's, Heimlich & Payne, Kroger, Apple, Capital One Finance, Chevron, Jeffries, UPS, Louisiana Pacific, Johnson & Johnson, Heinz Ketchup, or Kraft Heinz, and T-Mobile. This is just this list here. Now, the reason why I say I'm not sure what they do, but why it's on my list, well, this happens to be Warren Buffett's list. Every single one of these companies, with the exception of DHI, I know what they do. Okay? Now, that's one list that I'm looking at. And that's only 1 month. Of course, there's 3 months that goes with it. Now, I can go and take a look at this list. So listen to a couple of these. Kinder Morgan, Citigroup, Ford, Intel, British Petroleum, IBM, Visa, Siri, Wells Fargo, Emerson Electric, Hershey's, Starbucks, Walmart, ExxonMobil, Kroger, Clorox, ConocoPhillips, Apple, U.S. Steel. I could keep going on. But you see where I'm coming from? Each and every one that I personally like is a household name. Okay, except for maybe DHI. I have no idea who they are. But it's on Warren Buffett's list. So I kind of cheat with Warren Buffett's list. I kind of let it slide, and I just, hey, if it's good enough for Warren, it's good enough for me. That's my philosophy. Okay, so other than that, I want a good, quality, decent company that's been around for years. And here's my indicators when I pick out my stocks. 20 years, okay, 2 decades, 20 years of increased dividends, because a dividend is nothing more than the portion of the corporate's profits that goes back to you and me, the investors. Once you buy a stock, transfer. All right, so let's continue. We're looking at Halliburton. We found the high, we found the low, we found where it's going, blah, blah, blah. Now, I want to take a look at if I buy it tomorrow. Now, I already own it, and I got it at $31.96. All right. All right, so we're going to look at this week, and then we're going to look at next week. Because you got to remember, this week only has 3 days left. Okay, anytime you're selling options, there's a big difference in the thinking process of an option buyer and an option seller. Okay, you got to get that distinction correct. Now, as option sellers, that's what covered call is. You buy the stock, you sell the call option against your position to catch some cash, weekly cash flow. So that being said, as an option seller, I do it Monday to Friday. I'm looking for the value of the option to decrease to 0, because I'm going to sell it first, and then I will buy it back later. Okay, so anytime you do a trade, any kind of trade in the stock market, you open up a trade and then you have to close the trade. So if you buy a stock, you're buying to open a position. When you sell the stock, you're selling to close that position. Now, with the options, in the way that I do it, I sell the option to open a position, and eventually I have to buy the option in order to close the position. Preferably, I like to go into Friday afternoon and have that option expire worthless, and then it closes at 0. That works for me, okay? If I sell it at 17 and come Friday, it closes at 0, great. I don't have to buy it back. All right, so let's finish up with Halliburton. Halliburton, 31.19 at this moment in time. The 31s are going for 40. You take 19 cents off of that, and you're looking at 21 cents, which is not 1%. Okay, but there's only 3 days left. Because remember, on Monday I have 5 days of time value. 5 days. Tuesday I have 4 days of time value. Tomorrow morning is going to be Wednesday. I'm going to have 3 days of time value, so it might behoove me, might be a good idea, to look at next week's. Next week's 31 going for 65 cents. Well, that's more than 1%. Great. Okay, let's go back to the chart again. A year ago, 39.45, had a double top at 43.88, drops all the way down. Check this out. Here's our 30-day bottom. Okay, Monday the 5th, 2 weeks ago. Look at it, nice, slow, very slow upward movement. The bottom on the 5th was 30.31. Right now, it's at 31.08. That's a very slow increase for a 2-week period, but fine. Here's our 30-day high, 37, 30-day bottom at 30. That's a $7 drop. $7 drop on a $30 stock. Well, that's over 20% drop. Okay? Seasonality, what does Halliburton usually do this time of year? This time of year, usually, well, you can't hide that one now, can you? Take a look. Hey, here's where we are. Here's that little blue dot. That's today. Okay, here's the red line. Usually drops in the next week or two, and then comes back up again. But you got to ask yourself that one very important question. Do I like Halliburton, and do I like Halliburton at $31.19? Well, what has Halliburton got going for it? Well, it is one of the major defense contractors. They get a big fat check from Uncle Sam every single year. It could be a good play. I don't know. I just go by the numbers, and I do actually have some Halliburton at this moment in time. Okay, next on the list, British Petroleum, BP. Now, who wanted to look at BP? Brian, BP, cool beans. Stavros, looking for cash flow, Roundhill and Yield Max best you can get. All right, Stavros, we already took a look at Yield Max. Okay, was that Roundhill? Let's take a quick gander. I'm going to take a look at Roundhill next. Okay, now when I say something decent, 1% per week is 50% per year. If you're thinking cash flow, I don't think Yield Max or Roundhill is going to offer 50% per year. So I know Yield Max, Yield Max only pays like 8% per year, or 9. Yeah, no thank you. All right, British Petroleum. First thing, as always, the high, the low, where was it, where is it, and which direction is it going? Okay, 33.65, look at the 34s, 6 cents, nope. Next week's, nope. So it's going to be no to British Petroleum for this week. Now, I like British Petroleum. It is on my list, and I usually buy it. But the numbers are not being agreeable this week, so I'm saying no, thank you. Now, wait a second, 33.65 to 33.50s, well, that's 1%. This 33.50, not quite. If you like British Petroleum. The last 30 days for British Petroleum. Ooh, look at that. Here, 30 days ago, here we are, 35.40. Tops off at 35.45. A week later, we're at our bottom at 32.45. And look at this run up. Okay, we got a gap here, a gap here, and a gap here. Goes up, now she's coming back down again. Yep, I'm going to say no to British Petroleum for this week. All right, so Stavros, we already said yield max is a no. So you really think Round Hill is the best you can get? Round Hill. Wow. That makes it a little challenging because look at Round Hill. QDTE, XDTE, YBTC, CHAT. There's a lot of Round Hill ETFs. They're all electronically traded funds, which means you're giving your money to a computer. Haven't you seen enough of the Terminator movies? You know that's not a good idea. Seriously. So I really can't look and give you my opinion on Round Hill, especially because there's so many different, what do you call those? ETFs. Well, let's pick out one, QDTE. Okay, first of all, no, it's a monthly. All right, second of all, QDTE. QDTE. Okay. That can't be right. Only 1 year of dividends? Yeah, 1 year of dividends. And they're not even. Look at 36, 33, went down. 9, it went down. 27, 33, 25. 31, 38, 21, 21, 14, 23. Yeah, I'm terribly sorry, dude. I have no idea what the hell you're talking about when you say looking for cash flow, Round Hill and yield max best you can get. Yeah, terribly sorry, dude. I'm gonna have to say no. Okay, so yield max, we looked at that one a little while ago. Looking at Round Hill at this moment in time, just for the fun of it, the dividends, only 1 year worth of dividends. Any company can come up with 1 year of dividends. The yield, they don't even post the yield. Is it that crappy? Oh, that's why, because it's only a year old. Yeah, sorry, no. Brian, BT, what the heck is BTU? Bachman Turner, Underdrive. All right, so BTU, Peabody Energy Corporation. Interesting. First thing, as always, high, low, where was it, where is it, what direction is it going? This thing doesn't move at all. Look at it. 21 to 27. That's it. A $6 move between the whole year. Okay. 22.99. The 23s are going for 15 for this week. No. The 23s for next week, 33 cents. Okay, fine. A year ago was sitting at 22.35. We got a double top at the year at 27.21. And the bottom right here, last 30 days, there we go. Here you go for the last 30 days, all right? 30 days ago, 23, bottomed out at 20.40, topped out at 24, what is that? 24.32. 2 days later is the bottom with a gap down at 20.26. Now we go to the upside, a little pullback back up. Yeah. See 30 days ago in here, down and then back up. Yeah, well, she went down, up, down, then up again. But the same thing if you think about it. 30 days ago we're here, 30 days ago we're here. So where's it going now? Well, more than likely it looks like she should be coming back down. But Peabody, BTU, I'm not 100% sure I don't think I've ever traded BTU. BTU. Wow, really, dude? 1.3% yield, 1% per year. I'm showing you how to get 1% per week, and you're interested in doing 1% per year? Yeah, I'm going to say no to this one. Historical data. I want to look at the dividends because I want to see how profitable they are. Okay, that's my main concern. 2018, 19, nothing in 20, nothing in 21, nothing in 22. So she goes from 12 cents to 13 to 185 to 14 to 15 to 8. Well, to me, that sounds like they're losing money consistently. If you start out paying a 12-cent dividend and you end up with an 8-cent dividend 6 years later, what does that tell you, Brian? Think about it. Okay, if I'm going to invest my money, personally, my personal money into a company, I want to make sure they're consistently profitable. The quickest and easiest way, go straight to the dividends. Because the dividend, Joe Sullivan, what's happening? A dividends is going to tell you if the dividend is a portion of the profits the company pays to the investor. That's me and you. We are the investors. If that number keeps going down every single year, well, what the hell do you think that means? That means that they're not as profitable as they were last year or the year before or the year before. Because if they were more profitable, they'd be dishing out more higher dividends. I'm sorry to get it so simplistic. I mean, if they're not increasing their dividends, it means they're not consistently profitable. It is actually that simple. Okay? If I give you money to invest for me, great. And you give me, let's say you give me, let's say give you $100, and every week you give me $1. Okay, that's 1%. Then all of a sudden you start giving me 50 cents. Well, you just cut my dividend in half. Well, this one went from, what was it? From 12 to 8. Now, 12 to 8 is a 30% drop over a, what year period? 6-year period. 30% drop in a 6-year period. I'm going to think, no thank you. Okay, if you can't be profitable, I have no desire to even look at you. All right, Charlo, I'm not even going to look at that one. That's just a silly one. What's the best app to use? Cam, I couldn't tell you. I don't use any apps. I don't. I use Yahoo Finance, and I use my trading platform, which is Thinkorswim. I also use Robinhood, but I don't use Robinhood for research. I just use Robinhood for the buying and selling. Turber, Jim Neighbors was one heck of a singing voice. Just saying. Yes, he did. Can this strategy be used in a prop fund account? I have no idea whatsoever. You actually have to talk to a prop fund account manager. And so a prop fund account manager will let you know whether or not you can do, because I'm pretty sure prop fund, you can't carry positions overnight. So I remember years ago when they first started with day trading. Day trading, you'd be in the morning and you'd be out in the afternoon, and nobody carried anything over. Okay, here you have to carry stuff, so I don't know if you can do that. Okay, let's look at some more of these questions. Yes, and for starters. All right, Cam asked a question. For what? Trading? Yeah, we're trading here, Cam. Well, thank you. See, I don't have to do something. Ooh, Gallant wants to take a look at Abelmal. Now, just to let you know, Abelmal is one of the few companies. I say few because I have more than one loss this year. Abelmal is one of the few companies I actually lost money on this year. But we'll take a look at it. Stifler's mom. What is the time frame you have to own a stock to be eligible for a dividend? 1 day. Believe it or not, 1 day, and that is it. It sounds kind of weird. When I first started looking at investing, I looked at dividends, and I think, no, I don't have to buy a stock to collect that small little amount, because I thought you had to own it for the whole year. Nope, you got to own it for 1 or 2 days. That's it. Okay, what you see, these little green dots here, each one of these green dots represents the EX dividend date. Now, there's 4 dates to remember when you're looking at dividend stock. Date number 1, simple, it's the announcement date. That's when the company tells you. Date number 2, this is the most important one, the EX dividend date. It's represented by these little green dots. Okay, the EX dividend date is the last day the stock trades before the dividend is paid out. Date number 3, also a very important one. Not the most important, but still important, is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. 4th date is the payment date, again, self-explanatory when you get your money. Okay? But yeah, only one day. Each one of these, if here's KeyBank down here in Johnson & Johnson, the 27th. So if I want to collect the dividend on either one of these companies, Johnson & Johnson or KeyBank, I got to buy it the 26th, the 19th, the 22nd, the 14th, the 1st, the 30th, any date before the EX date. It's the EX date. Buy it before the EX date. You have to hold it for a day or two because they have what's called settlement period. Okay? Now, the settlement period is usually 1 or 2 days. So you buy it before the EX date, you sell it after the EX date. All right. La 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 la. Stifler's mom. If you buy the EX date, you qualify for the dividend. Cool. What's next on the list? Well, next on my list, we have Cisco. But I still have 99 questions to go through, and I don't want people thinking that I am ignoring them. Why is Tony Hawk talking stocks? Because Tony Hawk makes a lot of money, and Tony Hawk needs to find a place to put his money. That's why. All right, Charlo, this method works for long-term investments too. Rollover profits, great return. There you go, yeah. Target, ooh, Marathon Mom. Let's take a look at Target. TGT. I lost money on Target. I think I lost money on Target last year. Just tell them to ask them again and go to live comments. Well, that's what I'm doing right now, Joe. Okay, I got a lot. I got 99 more questions back in a year. Okay. For example, I bought 2,500 shares of Coney. Next month, dividends paid. I have 100% of my money. Okay. Kohl's, we already looked at Kohl's today. Okay, Elliott, Verizon, and AT&T. Verizon and AT&T. The funny thing is, when people want to take a look at Verizon, they also want to look at AT&T. When people want to look at AT&T, they always want to look at Verizon too. It's like they're comparing the two. Why not T-Mobile? They don't want to throw T-Mobile in there? Good times. I grabbed Verizon today. It looks like ready to pop. Up, down, right, A, B, section, start. All right, John. Contra baby. Good times. Cool. Alrighty, thank you. Hello, amigo. How about ALB? Hey, Reggie Bo Jackson. What's happening there, sir? All right, so we got 2 requests for Able Mall. ALB. Here we go. Able Mall. Now, Able Mall is one of the few companies I actually lost money on this year. Didn't plan on it. It just happened. Every once in a while, even I do make mistakes, and I made a mistake, got out when I shouldn't have. Anyway, first thing I always want to see, the high, the low, where was it, where is it, and look at the direction. Here's the low of the year right now. This is what I like to look for. The low of the year, and she's turning around and going to the upside. Great. That's where you're going to make your money. Buying low, selling high. Do you like Able Mall? Good. Let's take a look at the numbers. At this moment, 85.19. Now, 85.19. This week, 85.19. Look at this. The 85 is going for 140. You take the 19 cents off of this 140, you're still walking away with 121. 121 on $80, $85 stock is over 1%, and that's what we're looking for. So the question comes is it the right time to buy Able Mall? Now, Able Mall is a good company, okay? I bought it in the past. So let's take a look at the chart. Okay, a year ago, we were at 186.74. The top of the year was 201.65. Okay, bottoms out right down here. Last Wednesday, she bottomed out at 71.97. We have 4 days to the upside. Look at the last 30 days. Okay, here's your 30-day high right here, 99.47. Your 30-day bottom right here at 72. We got all this space up here to go to the upside. Well, cool. I like that. Better yet, I like to buy it first thing in the morning at 85.19. Sell the 85s for 140. Walk away from my 1%, and all it has to do is stay above 85. Okay, fine. Works for me. What about the 84s? Well, the 84s are paying 189. That might be a better play because the stock doesn't have to do anything but stay above 84. Well, let's take a look. Now, we're just going to do a quick trade to see how it looks and for you guys to see how quick and easy it is. So I like Abelmal. Great. Let's get this out of the way. We're going to do the 84s. So the 84s right here. Going to buy a covered call on Abelmal. Now, I'm not going to do 1,000 shares. Let's take a look at 300 because, you know, some people get intimidated by looking at the big numbers. I don't want people to be intimidated. All right, just going to do 300 shares. Okay, 300 shares, which is 3 contracts. Each contract controls 100 shares of stock. So this is a covered call trade. Buying 300 shares, selling 3 contracts, the $84, and I'm going to do it at the market order so it fills immediately. Hit confirm and send. Now, this is what the trade sounds like. Now, I always tell people to read the order out loud because your eyes can deceive you. Okay? So, your eyes can deceive you, but if both of your eyes and your ears hearing and seeing the same thing, then okay. All right. Buy 3 covered calls, Abelmal 100s. Those are the weeklies. 23 August 24. That is this coming Friday, 3 days away. The $84 call strike, the Abelmal stock at the price to open to open. Well, to open means you're doing 2 orders at once. Okay, I'm opening a stock order and I'm opening an options order. Okay, to open. Eventually, I have to close both orders. All right. My break-even price is $82.28. Well, right now the stock's at $85.19. So if it goes up, great. Stays the same, great. It can even come down a little bit, and I'm still making money. Well, stocks only do 3 things: goes up, goes nowhere, or goes down. Actually, that actually worked for a while. Let me grab another one. All right, let's grab another one. My maximum profit on this trade, $514. Well, let's get my calculator. Let's bring it over here so we can see it better. Let's clear that and put $514. That's the price right there, right? Maximum, right here, see? Maximum profit, $514. Okay, cost of trade including commissions, $24,687. $24,687. Let's try this one more time. Divided by 24,687. Okay? Divided by. All right, I was doing the wrong. Okay. That's a 2% trade. I would prefer to do the 84 because the stock doesn't have to go up. Now, the 85, you're probably going to get a higher rate of return, but, and this is a big one, but the stock actually has to go up in value. Right now, it's at 84.22, all right? But here's the last traded price, the bid, the ask. So I'm buying it at the ask price. Okay, now these numbers will change in the morning, but what doesn't change is the mathematics and the mathematical equation. Okay, this is what I'm buying for. This is the strike price I'm selling. This is the premium I'm collecting. The 84 has a lower rate of return, but the stock doesn't have to move at all. The 85 has a higher rate of return, means you make a little bit more money, but then the stock has to move up. Okay, so if I do the 84, the stock doesn't have to do anything, and I got all 3 bases covered. Go up, great. Stay the same, great. Come down just a little bit, still great. Okay, I have my break-even point. All right, still got 99 questions. Holy cow! I want to learn trading. Journey, nice to see you. All right, Dennis. All right, we've already looked at Kohl's. Down when I send a covered call out the money, it will be bought. No. Dennis, I really don't know because we already looked at calls earlier. Okay, now I do have some calls. I did sell my covered calls against Coles. I brought in 20 cents. I didn't get quite 1%. It's like 0.9, 0.85, something like that. Close. Don't get it all the time, but more than most of the time. I don't know what we're looking at. UMCE is one of the largest mortgage brokers in the U.S., but was private until a few years ago. Barcode. I think it's great that you want to stand there and defend your stock pick. Nothing wrong with it at all. If it works for you, great, more power to you. But you got to remember the situation that I'm in. I have no idea what your situation is. Okay, the trading strategy I'm showing you works for me. All right, and it works for people that are in my same situation. Okay, what am I looking for? Well, I'm looking for a safe, predictable, consistent 1% per week. You're asking me to take a look at UWMC. I took a look at it. UWMC. Okay. Right now it's at 924. It is actually at the high of the year. Why would I buy it at the high of the year? Okay, buying it at the high of the year, now I have to wait for it to go higher. There's no guarantee it's going to go higher. And that's not a game I want to play. Because stock goes up, it goes down, it goes up, it goes down, it goes up, it goes down. I want it to come down before I jump in because I want to buy low and sell high. I do not want to buy high and wait for it to get higher. All right? Also, UWMC. Okay. UWMC's only been available for the general public to invest in for the past 3 years. Like you just said, I'm going to agree with you. Great, fine, dandy. Well, why are the dividends not increasing? Okay. Now, if the dividend is a portion of the profits paid to the investors, shouldn't that increase every year? So if it's supposed to increase every year, why isn't this one? This one's not increasing at all. Okay, so, and it only has 3 years worth of historical performance. No, thank you. Okay, I like 20 years of increased dividends. Reason for that is, well, it's my money, my rules, okay? That's as simple as it can be. Thank you, Dennis, I'm glad you get it. But think about it. If you're going to invest your money, you can do whatever you want, okay? I don't ever tell people they're wrong with what they're doing. I may say, what the hell are you thinking? Because you put your money into a company that has 3 years worth of history to it. 3. That doesn't work for me. That doesn't give me a warm, comfy feeling to make me sleep at night. Sorry. Now, I know Home Depot has been around for over 100 years, and I know they consistently give me 1% per week or more when I look at Home Depot. So why would I look at a company I know absolutely nothing about? I've never heard of them. Okay? Okay, you can do whatever you want with your money. To me, I like that sense of comfort, that sense of, okay, I know who they are. Okay? I can actually go to Home Depot. I can actually go to Walgreens. Gallant, Siri, and Abelmal look good. All right, we already looked at Abelmal. Let's take a quick gander at Siri. Siri, always, always, always. The high, the low, where was it, where is it, blah, blah, blah. Look at that nice little bump up right there. Cool beans. So I like to look at the chart. The chart looks actually nice. What the hell is this? No, what the hell did I just do? I have no idea what the hell that was. I hate it when the computer companies, they automatically update your software and then put a piece of crap in there. I have no idea what it is. It may be helpful, it may not be, but I'm probably never going to use it. All right, so Siri, high, low, where was it, where is it, where it's going, blah, 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 all that kind of nice, neat, fun stuff. Current price. Okay. Last 30 days. guys. Here we go. 30 days ago, 334, a double top at 412. Here's our 30-day bottom on Monday the 5th. She went up, she came down, she went up, she came down. Now she's going up again. She's at 3 1/4. Okay, so the 3 for this week, the 3 is going for 23. Well, if I'm buying it at 326 and I'm selling the 3, I'm only collecting 23 cents. Well, I'm losing money on this deal. Yeah, no thanks. Next week's 3, 23 cents again? Yeah, no thanks. But the 350, look at the 350. The 350 is going for 5 cents. You would think that 23 cents is better than 5. Nope, 5 cents is better than 23 cents. Why? Well, because the purchase price is 326. If I sell it at 3, I'm losing 26 cents right off the top. Okay? If they're only giving me 23, well, that's -3. That doesn't work for me. Okay, it's at 326. If I sell the 350, that's an additional 24 cents if it goes higher. Now I'm making my 5 cents. Now 5 cents is more than 1% of $3 stock. Okay, 1% of a $3 stock is 3 cents. All percentages, all numbers. So Siri does look kind of interesting, but I'd go with 3.5. I wouldn't do the 3. Even though the 3 is a safer bet, you're losing money on the 3. All right, so let's keep on keeping on. Got to get the best of. I invested $50,000 into Coney. In 1 year, I have 100% of my money back. Hee hee, dividends. Yeah, good for you. However, Stavros, I'm not 100% sure you actually got your numbers correct, because I looked at the numbers. The dividends do not come up to 100% rate of return. Okay, your rate of return for Coney was absolutely crappy. What is Coney? C-O-N-Y. Okay, so hypothetically speaking, Coney, $15.85. Okay, so August to August. Doesn't even have 1 year. Not even 1 year of historical performance. It's 1, 2, 4, 6, 7, 8, 10, 12, 13, 14, 15. Well, alrighty then. Terribly sorry, dude. I'm just no. Okay, not even 1 year of what do you call it? Of historical performance. Definitely a gambling man over there. Charles, you do a very good job. Thank you very much. You have it wrong. I have it wrong. Huh. Okay, yield max. October, November, December, January. Okay, see, I'm not quite sure, Stavros, I get it wrong. Because I'm looking at historical performance on YouTube, not YouTube, Yahoo Finance. Okay? October 23rd, October 23, November, December, January, February, March, April, May, June, July, August. Okay, so 121, yeah. Nice, you get a dividend every month. Wonderful. Okay? But it's only been 1 year. Most companies go out of business within 3 to 5 years. Most companies, 3 to 5 years out of business. All right, I'm not going to entertain you anymore, Stavros. How about a swim with Whirlpool? Ooh, Whirlpool. WHR, Whirlpool. Okay, first thing I always want to see, the high, the low, where was it, where is it, what direction is it going? 96.52, 96.89, look at the 97s. Ooh, not quite. 97s next week, yep. That works. Hey, Whirlpool, 134 was a year ago, topped off at 142.52, and that was the end of August of last year. Great, well, here's the bottom right here in May. May 29th, and it dropped all the way down to $84. Shoots on up. Here's our high right here, our most recent high at 115.67. Drops down to the 7th. And look at from the 7th. Nice run up. Today was a little bit of a pullback. She gapped down a little bit today. Well, she opened lower today, but she didn't make a new high. So could it be the end of the run? Well, here's today. Today's one, it's lower. Tomorrow could be confirmation. Because I like 2 days to give me some type of signal. Like, this is it, no more, you know, that type of thing. Okay, so let's take a quick look at seasonality. What does Whirlpool usually do this time of year? Well, this time of year, well, that's plain to see. Take a look at this. We line it up right there. She's going to come to the downside for the next couple of weeks. Now, that's historical performance. That's not guaranteed to supersede the, what do you call that? That does not supersede the current trend, because the trend is usually the strongest. WHP 30 August out of the money at 0.014. Hey Dennis, what is WHP? WHP has no options there, Dennis. WHR, okay. WHR. You know, that's where most people are going to lose most of their money, by typing in the wrong letters or hitting the wrong buttons. That's why I always tell people, always read the orders out loud. That way you can hear it and you can see it to make sure you're right. Hey, Michael Douglas. I have no idea what that means. Stavros. Uh-oh. Carlo. All right, what are we looking at? I gotta go back a little bit. Are you spray tanning? Oh my god, what the hell would you get that idea from? No, I'm Italian. I go outside and automatically get tanned. WHI, I was checking in the math with you. Oh, okay. Thanks, Dennis. All right, how far do I have to go back? I'm missing a lot of these questions. EL, Able Mall. Coin for where? Mara. Uh-oh. Wow, I have all these questions that I missed. All right, Stavros, I have it wrong. Thank you. You need to do more research into UWMC. It's not a 3-year-old company. It just went public 3 years ago. See if I can explain this in a term in which you understand, because you're having a little bit of an issue. Okay? So, if I go back and look up historical performance of a company, and it gives me 3 years worth of data, well, then it has 3 years worth of data. That's all that means. Okay? 3 years worth. I like 20 years worth of data. 20. That's 2 decades. Okay? I honestly really don't care what UWMC does or did do or is going to plan to doing. If it only has 3 years worth of historical data for me to check, well, that's all that I can check. Okay? And I've never even heard of UWMC. Okay? I've heard of Coca-Cola. I've heard of Pepsi. I've heard of Whirlpool. I've heard of Corning. I've heard of Clorox. I've heard of Capital One Finance. I've heard of Colgate-Palmolive. There's a lot of companies I've heard of that I'm okay with buying. Remember what I say, rule number 1, never buy something you don't understand. I don't understand UWMC at all. Okay, when I look up the history to try to find information of it, well, I find 3 years worth of information. I honestly really don't care if they were founded in 1732 and they actually started trading or becoming a public company 3 years ago. Really don't care. 3 years worth of information means I have 3 years worth of data to look at. I don't like 3 years worth of data. I like 20. All right, so if I'm looking at a company, okay, and it's showing me 3 years worth of data and it's not increasing their dividends at all, well, why the hell would I invest in a company that's not consistently profitable? I'm terribly sorry. Hi, Gotti. It's a good idea to hire a stockbroker. Oh, at first, yeah, you talk to a stockbroker. They'll walk you through the trades. Charlo, all my money I have from dividends are sitting in my account. I didn't reinvest them. Okay. Guys come in here thinking they have a gotcha. Dude has all the stocks memorized. Oh, thank you, dear Patrick. Not all of them, only the ones I find interesting. Well, think about it this way, okay? Now, I come from an age group, okay? We are Generation X, okay? We are whatever you want to call us. Number one, we really don't give a rat's ass about your opinion. We don't give a rat's ass about your feelings. There's no safe spaces here. You are not going to get a participation trophy. You're not, all right? And I'm not really afraid of offending you. But when I say I like certain things for where I put my money, I like looking at companies that have consistently been profitable. The only way you can tell if a company's consistently profitable are a few different ways. Take a look at the annual reports. Every single year, read the annual reports. It'll tell you exactly how much money's coming in, how much money's going out. Or you can cut all that bullshit and go right to the dividends. Because in the corporate bylaws, a certain portion of their profits get paid to the investors. If that number is not increasing on a consistent basis, I don't want to look at it. And I'm trying to figure out, why is it that grown men can't understand that? I honestly don't care about the company. It's got 3 years worth of data. They do not increase their dividends. Why the hell would I want to put it into my roster? Okay? I've got companies that have consistently increased for over 50 consecutive years, over 20 consecutive years. This is where I want to put my money. Safe, predictable, consistent 1% per week. Okay, do you tend to open more short than long trades? Okay, Adrian, my longest trade I've ever done is 9 months. And I didn't do it because I wanted to. Okay? I wanted to buy the stock, get in on a Monday, get out on a Friday. Does it happen all the time? No, because stocks have a tendency to go down. And then they go up, and then they go down, and then they go up, and then they go down. That's all they do. They do not come to your house, make your bed. They do not even come to help you out on the side of the road when you get a flat. No, they go up, they go down. That's it. Right here. Okay. How often are you buying to close? All right, Patrick. On Monday mornings is when I do all my buying. Okay, Mondays and Tuesday. 90%, 90 to 95% of all my buying is on a Monday, because I sell options for cash flow. Now, options have a tendency to go down coming into Friday. Okay, so 23 August 24, that's this Friday. At this moment in time, there's only 3 days left of time value. Now, when you're looking at an option, this option chain here, this is for this week, 23 August. This is for next week, 30 August. This is for the following week, 6 September, so on and so forth. Okay, there's certain calculations you got to calculate. What am I buying it for? What am I selling it for? What is my rate of return? Great, they're all numbers. Always, always, always about the numbers. How much am I putting in? How much am I getting back? Okay, so if I buy on a Monday, I don't know what I am going to do until Friday afternoon comes along. Because if I buy on a Monday and I sell my option on a Monday, well, I have Tuesday, Wednesday, Thursday to keep my eye on it to see what it's doing. See, years ago, I'd only look at it once a day. That was in the mornings. But since January, I decided to do this live show, so now I'm looking at it twice a day. In the morning, with the morning trading group, I have a live trading group that joins me every morning, okay? And then on Friday afternoon at 3 p.m., we jump on again, because Friday afternoon, we take a look at the positions we jumped in, and then we find out what we have to do Friday afternoon, either to cash out, either to buy this, either to sell that. But we cannot answer the questions of Friday afternoon, with today only being Tuesday evening. Okay. All right, I'm getting tired of you, Stavros. There we go. Okay, Mira. Mira, M-I-R-A. All right, Mira is going to be a no. And who said that one? I can't even read that name. Ululu. Oh, Lulu Lambo. Mira. So it's going to be a no because it has no options at all. And it's $1.94. At $1.94, I seriously doubt they have 20 years of increased dividends. What if the stock goes above the strike and then you can lose money? D money. I'm not quite sure that's an issue. Okay? So let's take a look at Macy's for a second and let me see if I can explain this to you in a manner which you might understand a little bit better. Okay, here's the price I can buy it for. $17.85. You can't argue with that. $17.85 is the number that's up currently what I can buy it for. The 18 is going for 76 cents. Well, that's a nice freaking premium. Seriously, it is. So if I buy it at $17.85, I sell the $18 strike price, I'm collecting 76 cents, correct? Now, let's say hypothetically the stock goes from where it is to 22 or 25 or whatever. So it goes up. Am I losing? No, because I bought it at $17.85. I sold it at 18. I collected 76 cents for the premium, which is way over 1%. And I'm also going to collect the difference between the purchase price and the strike price, which is an additional 15 cents. So you got an additional 15 cents onto this price right here. Now you're looking at 91 cents per share that I'm collecting on a stock. So if it goes from where it is, it can go up to 30, 40, 50, $60. Okay, it doesn't change what I bought it for, what I sold, and what I collected. Okay, so hopefully that answers that question. Okay, Tiger, coin for where? No. Round Hill, pay weekly, massive dividends. All right, Stavros, you are wrong. Thank you. Syrian Able model look good. We already looked at that. Stavros, bro, this is not a hold and hope strategy. It's not for you. Move on. Thank you, Redneck. Brian, we already took a look at Able Mall. Okay, but Pfizer, I'll write Pfizer down, PFE. Okay, I wrote Pfizer down. EL, Estee Lauder. Now, just to let you know, Brian, I do have some Estee Lauder. This is a specific strategy. Yep. All right. Thank you, Charlo. Thank you. Thank you. Florida Gal. I haven't heard from you in weeks. What's happening? That guy is the one that has no idea. James is very good at this. Well, I thank you for that, Florida Gal. Now, for people such as Stavros, I post all my trades. Where are they? Where are they? Right here. See, all my trades are posted right here. Now, could I sit at home and make more money? Well, yeah, I could. Do I have that desire? No, I don't. Joe Sullivan wants to take a look at Merck or Pfizer for next week. MRK and Pfizer. We'll take a look at those in a little bit. So, as I was saying, here's all my trades right here. Okay? Week 26, 1.5%. Week 27, 3.37%. Week 28, 5.2%. Week number 29, 2.26%. Do I get 1% every week? No, I don't. Sometimes I make more, sometimes I make less. But I do average over 1% per week. But that's my goal. Okay? I'm not looking for, Stavros is probably looking for big moves. I'm not. I'm looking for a safe, predictable, and consistent. And I can't emphasize that word safe enough. Safe, predictable, and consistent. Simone, how are you today, Miss Simone? Okay. That's great, but not a strategy we're discussing here. Yep. Marathon Mon. Rio. What the heck is Rio? Didn't we look at Rio once? Okay, we looked at Rio once, and Rio does not fit this trading strategy. It is a monthly. Okay? I don't like monthlies because the numbers just don't work. All right, so we had to get rid of that fella because he was just how's a word like belligerent? That's a good word, isn't it? Okay, Florida gal, I haven't heard from you in a while. Okay, you owe me a lunch because you said so. All right, Simone, how are you? All right, so Rio's going to be a no. We already took a look at that one. This is for weekly cash flow for retirement. Thank you. Now, I'm retired, so yeah, I originally created for my 9-year-old daughter. Simple, safe, predictable, consistent, all that kind of nice, neat, fun stuff. Remember the 5 criteria? It had to be simple, safe, predictable, consistent, and no way to lose. Well, that no way to lose once has a bunch of people in a panties in a wad. Will they ever learn? Apparently not. All right, so let's keep moving. D-Money. Can you lose money if the stock goes above the strike price? D-Money, I think we just covered this a minute ago. So let's take a look at... Okay. So if I like AT&T, right? Riot. No, that's not what I want. Okay, here's AT&T right here. Okay, if I like AT&T, the current price is $19.48. All right, if I buy it at $19.48 and I sell the 19.50s, I wouldn't do it for this week. I'd do it for next week. Okay, 36 cents. I'm making more, almost 2%. Okay, if I buy it here and I sell it here, I'm making 1%. Okay, fine. If the stock goes up, right now it's at $19.49. If the stock goes up to $20, $30, $40, I don't lose any money, okay? Because I bought it at $19.48, I'm selling it at $19.50. I make the 2 cents difference between this, and I collect that 21 cents. I'm not looking for capital increase. I'm not looking for the stock price to go up, okay? That's called capital appreciation. I'm not looking for that. I'm looking for this right here, the premium. If the premium's consistently 1% that I capture every single week, well, that 1% every single week is going to be over 50% per year, and that's what I'm looking for. You can roll out, but this strategy is about the premium. Idea is to be back into cash. Absolutely, redneck. Okay, thoughts on INM? I've never heard of INM. INM. InMed Pharmaceuticals. Dude, it's not even a buck. Okay, I can't even believe we're looking at that one. Username, UNH, no. LLY, look like a strong. Okay, LLY, is that Eli Lilly? Yeah, Eli Lilly. Okay, now, don't get me wrong, I like Eli Lilly. It's a good company. It's been around for a long period of time, but it's a little out of my price range. It is. I like to stick with stocks 250 below. Because I think, personally, this is just me, I think at $950 is a long way to the bottom. Okay, so if you buy it at $950 and it drops to zero, that's a long drop. But then again, 250 from 250 down to zero, you're still losing 100%. You know, it is what it is. It's just out of my price range. I won't be trading it because I can't afford, you know, 2, 3, 4, 100 shares of it. Because 100 shares of that is $90,000. 100 shares, 90,000. 200 shares, a little too much money for me. Blank, you bought WAB, which is Walgreens. Cool beans. No, all right. So blank, you're the one who asked me if I'm spray tanning. No, dude, I'm not spray tanning. Okay. If I go like this, open up here, see the white spot right there? Yeah, spray tanning, you get tanned all over. No. See, I'm Italian, so when I go outside, I automatically get tanned. Kids at school used to hate me. Summer comes, and they're out there baking in the sun. I just walk out in the sun, and I get nice golden brown. It's just one of those things. Inspire me more. Hiya, James. How do you sell contracts when the stock is down a lot to avoid losses? That is a great question because it does happen. And as a matter of fact, AEO. Now, I don't know if you remember last week, I was having glitches with my computer. All right, it kept kept shutting down last week. So, and we would lose everything. Now, when it did that, it reset my time clock. Okay, so my time clock was 15 minutes slow. So on Friday, damn it, I gotta have one of these at all times. Hold on a second. This keeps the cough from happening. Don't ask me why. So last Friday, when I was balancing out my account, I was coming to AEO to make the trade so I wouldn't lose any money. But lo and behold, the clock on my computer said 3:45 as the market closing bell is ringing at 4 o'clock. And I'm looking at this, fuck, because I lost money on AEO last week because of that glitch in the system. Now, it happens. So when a stock price, now I jumped into AEO at 26, way up here. Okay, right now it's at 21. Okay, now I held on to AEO for 4 months. I got it in April 1st. Every single week I collected a premium. So I got a premium every single week on AEO. And it was a nice premium too. A lot of them was over 1%. But here's the thing. I bought it at 26. And right now it's at 21. So I would sell the 2250s or the 23s. I like to go 2 to 3 strikes out of the money and continually follow it. Because I follow it twice a day. Once in the morning with the live trading group, in case any of you guys are interested in that, and once at night with you guys here. So I look at where it opens up in the morning, and then at night I see where it closes. But on Friday, the mix-up with my computer made me lose money. I didn't do it on purpose, and I normally don't do that. But yeah, as the stock goes down, you can lower your strike price, but make sure you stay far enough away out of the money so you don't have a risk of that thing jumping. Take a good look at how the stock moves. Now this is something I just found out recently. I didn't even know it existed until just recently. Look at the numbers right up here.
Saying one thing and then getting me to
See all these numbers here? All right. That number right there is an R. I never knew what that R stood for until it dawned on me. Range. How much has the stock moved on that day? Well, this day here, the stock's range was 70 cents. Here, 52 cents, 77, 68, 94, 39. So if you take a look at the average range, how much does the stock move on a weekly basis? Okay, well that's number right here. That's how much it moves on a daily basis. So if you're looking at a stock that has a lot of movement, well then you go further out. If you're looking at a stock that has smaller movement, then it's a smaller one. Isn't a long call a safer bet in some scenarios? Well, yes it is. Think about it. If I buy AEO at 22.09, okay, that's the current price. This week's 22s are going for 14 cents, okay. Next week's 22s are going for 82 cents, which is a better deal. But let's go further out. So 3 weeks out, 81. So why is 3 weeks out 81 and 2 weeks out 82? Okay, so the further you go out, it doesn't always work that way. I take a look at the numbers. I would prefer doing 2 weeks out at 22, because look where we are, 21.43. Well, the 22 is right there. It's actually pretty close, and that's more than a 1% return. So I always go by the numbers. Inspire me more. How do you sell contract? Yeah, we just did that one. Oh. Poopy people. Poopy pee-pee hands. Okay, why dividends and not just regular investing? Poopy pee-pee hands, we talked about this before. This is not the first time you gave me this question. Okay? Why not regular investing? Well, there's a little bit of an issue when it comes to regular investing. Number one, how do you find what stocks to buy? There's 9,598 different companies to choose from on any day. So out of those 9,598 companies, how do you choose which one to look at? It's a valid question. Okay, I only like companies that have 20 years of increased dividends, which means they're consistently profitable for more than 20 years. Okay, well that works for me. And weekly options. Well, now I'm down to just 300 companies because there's only 300 companies that have consistently increased their dividends and have weekly options. Now I have 300 to look at. Great. Why don't I just buy it? Why the dividends? Well, because the dividend stocks, okay, the calendar here, the dividend stocks, each one of these green things represents a dividend date with a dividend stock. And these are the companies that I like. So when the dividend is coming up, the stock has a tendency to increase in value. Stocks only move for two reasons. Reason number one is what they call a unknown reason. What is an unknown reason? Major lawsuit, natural disaster, the death of one of the main employees. Okay, that's an unknown reason. You can only react to that. You cannot plan for an unknown reason. You can't. Right? Second is a known reason. What is a known reason? Well, a known reason is earnings reports. They come out at a certain time every year. Some people look at the earnings reports and they take a look at, well, should I buy this stock? The earnings report's coming out. This is what it says, blah, blah, blah. That's a known reason. Dividends, also a known reason. These little dates, these little green dots, they represent the EX dates, the last day the stock trades before the dividend's paid out. If I want to collect the dividend on Kroger, I have to buy it before the 15th. If I want the dividend on Baxter, well, I have to buy it before the 30th. Funny thing about these little green dates is the stock has a tendency to increase in value just before the dividend. That is a known reason. Also a known reason is seasonality. Certain stocks react at different times of year. Why does Weight Watchers go up in January? Well, that's a no-brainer. Why does Hershey's go up in the first week of February? Again, another no-brainer. Oil stocks have a tendency to go up in March. Why? Well, because we all turn our heaters on at the same time, which means our tanks are empty at the same time. You can buy oil from January to December, but you don't turn on your oil burner until November. And then November, December, January, February, what happens in March? 5 months, well, now it's time to refill. Well, if everybody's refilling at the same time, oil prices go up. Okay, predictability, seasonality, and known events have tendencies to create stock movement. So if I know when a stock is going to go up in value, hence the dividend dates, then I'll know when to jump in to buy it. That's only half the equation. The other half of the equation is the actual chart. Where's the high? Where's the low? What direction is it going? Where is it at this current moment in time? Well, this moment in time, well, here we are. Here's the bottom. She's going up nicely. Now the question is, do I like AEO at this price? And at this price, if I buy it at this price, what can I expect to get as a rate of return? Well, here's the purchase price right here. If I buy it at 22 and I sell it at 22, well, I really don't have very much risk, do I? If I'm buying it at 22 and I'm selling it at 22, there's no risk there. Okay? The 22 is going to give me 82 cents a share. That is just a little bit above 3% for a week and a half. Okay, I like 3% for a week and a half. And I also like AEO. I might be able to jump into it next week. I don't know yet. Okay, at this moment in time, AEO is a loss for me. I actually lost money on AEO because of a computer glitch. Judy Steele, how are you today? Judy, I'm going to apologize now. I'm at my son's house, and every once in a while, the YouTube camera overheats, and then it shuts off. So, sorry if it shuts off on you. Okay, let's take a look at a few more. Somebody wants to take a look at JEPI. Hell no. That's a hell no. So, poopy pee-pee hands. I hope that answers your question. Okay? Now, with that statement, Why dividends? Why not just regular investing? Because regular investing, I'm retired. I'm looking for cash flow. Okay? Regular investing doesn't have anything to do with cash flow. It has to do with being right, picking the right company, and waiting for it to increase in value. Sorry, I'm not there. Macy's earnings tomorrow morning. Hey, Wade, how are you? Haven't heard from you in a while. Macy's, you say, huh? Yep. Tomorrow morning at 9 a.m., Macy's has its earnings report before the market opens. Well, what does that mean? Well, it could mean two different things. If it's a positive report, how will it affect the stock? I don't know. I like Macy's. I'm not sure if I even have any Macy's this year. I mean, this month. No Macy's there. Oh, I have Macy's right here. And no Macy's there. So I do have Macy's in one of the accounts that I share. Remember, I have 6 accounts. I share 3 of them with you guys. It used to be 2, but I upgraded it to 3. So you guys have a better choice. I mean, what do you call it? Okay. Just looked at the numbers on Coney. I call BS.
I don't like how it's cats sit.
Okay, well, Redneck, you got to remember, Coney is only a year old. Okay, remember, a lot of these companies nowadays are getting free money. So you get all this free money and they stick it into this, and then they're operating at a huge loss. So they pay out big premiums and big dividends to entice people to buy the stocks, to get more money to come in to offset their losses. Okay, see, JEPI and what do you call it? What was the one we were just talking about? Coney? They have no historical performance. Okay, so any company can go in and attract investors. Hey, this is what we're going to do. This is what we're going to do. Blah blah blah. And, give a great elevator pitch. Wonderful. Now this big fat chunk of money. Okay, so they're dishing out money, but it's not increasing its dividends consistently. It has no historical performance. It's good for some people. It's not good for me. Profeeder, I have 30,000 in Coney. Average cost $15. Thoughts or anything better? We were just talking about Coney a little while ago.
This one shot twice the day. This one shot once the day. 3.
Okay, so Mark Sherman wants to take a look at General Mills, GIS. Profiteer. Okay. Thinking about joining the trading group, can you look at MRK and Pfizer for next week? Joe, it is on the list. Okay, so I do create a list when people ask me to take a look at stuff. Right now, I have 25 more questions to go through. I don't want people to think I'm ignoring them. Okay, Merck and Pfizer is on the list. Okay, we'll take a look at them in a minute. Let me go through some of these questions. Now, Profiteer, I'm not quite sure if I said it right. I like weekly cash flow. I like companies that have consistent profits. Coney does not fit in my personal trading strategy. Okay, you may like Coney and it may work for you. Okay, but I do know Coney does not give 50% rate of return for the year. Okay, if it did, I'm sure more people would be doing it. And it only has 1 year of historical performance. Thank you. Abelmal, maybe can't see really. Abelmal, maybe can't see really. All right. It's at 84.68. Blank, I have no idea what we're talking about. Did we look at CC? All right, when you said CC, I thought you were talking about covered calls. Chimers. Okay, well, Chimers is at 18. Okay, here's the high, here's the bottom. That's where we was, this is where we is. That's where we is. That's where we are. 1821 to 1840. Okay, market maker's trying to push it up. Nice. 1840. Take a look at the 18s. Excuse me. The 19's 5 cents. Nope. The 19's for next week. Okay, that works. The 18's are going for 60. Cool. So next week, yes, for Chammers. Okay, we got a high at 25.85. Last 30 days. Look at that top. Holy cow, 24.47. Gaps down, have a bottom right here. Sorry, Hollywood, it don't look that good. Here's the bottom here on the 12th. She shoots up for 3 days, it comes back down for 3 days. Okay, really kind of at a standstill at the moment. No rhyme or reason. Each time this thing disappears, I start coughing. Anyway, let's roll. All right. 31. Time to grab a few puts on Meta. Good times. Meta is going to be a no, and the only reason Meta is a no, in my humble opinion, well, a couple of reasons, okay? Reason number one, and this is the biggest reason, number one, Meta had just started paying dividends, okay? Which means M-E-T-A. Okay? So Meta has just started paying dividends. It's paid 2 dividends. That's it. Okay? No historical performance in the paying of dividends. So I will be more than happy to take a look at Meta and give it consideration in about 15 years. Okay? Core Medics. Never heard of Core Medics. All right. Let's jump in, take a look at MRK and Pfizer. Mr. Sullivan over here has been very patient. Pfizer, PFE. First thing I always want to see, the high, the low, where was it, where is it, what direction is it going? Cool. Now, 28.92, we're looking at the 29s. This week's 29s, not quite 1% for this week, but for next week, 40 cents. Okay, that's over 1.5 points. Okay, that works. Now, Pfizer a year ago was at the high of the year at 37.19. Drop down to the bottom of the year. Look at this, we got a quadruple bottom. We got a quadruple bottom. 4, 1, 2, 3, 4. Right in April. 25.23. Last 30 days. Here we go. Check that out. Now this looks very promising. Joe, take a look at this. 30 days ago, we were at 30 bucks. 31.50 is our high. That was on the 30th of July. From there, 2.5 weeks to the bottom, and here's our bottom right here on the 16th, and that was 27.85. 2 days to the upside. That's exactly what we're looking for, Joe. A good company, 30-day high, 30-day bottom, 2 days to the upside, 28.90. The 29s are going for 1.5 points. That's 1.5%. But that's for next Friday, not this Friday. But look where it is. Here's your 30-day bottom. You're going to make your money in the stock market buying low and selling high. Well, you're not going to get any lower than the 30-day low, and that was 2 days ago. Okay, that's a good one. I like that one. MRK. First thing is always, high, low, what is it? What direction is it going? So on and so forth. That's okay, just a doggy. Doggies are trying to come in the room and say hi. Not wrong with that at all. All right. 115.20 is the purchase price. 115.20. Okay? So the 115s are going for 91 cents for this week. Not quite 1%. Next week, the 115s are going for 159. Well, there's your 1%. 30 days. Here we Yeah, 30 days ago, we're sitting at 125. Okay, we topped out at 128.73. That was the end of July. The bottom is right here on the 7th. Up, down, 3 days to the upside. Cool beans. So actually, Joe, they actually both look pretty good. All right. Larissa made this. Do stocks have to be dividend stocks to do covered calls? No, absolutely not. Now, Larissa, the only reason I use dividend stocks for 2 reasons. Reason number 1, dividend stocks have a tendency to go up before the dividend is paid. Well, that gives me an idea of when to buy. Okay? I like that idea. Okay? If a dividend stock's getting ready to pay, well, if I buy it 2 weeks before the dividend date, well, it's going to go up in value, and that's what I want to take a look at. That's number 1. Number 2, let's zoom out of this for a second because I might be able to use this as a strategy. All right. Now, all stocks have a tendency to do this. Okay? They go down, they go up, they go down, they go up, they go down, up, down, up, down, up, down, up, down, up, drop. What happens when a stock drops? Now, most people buy stocks to hold for months, years, decades. Well, great. Well, why are you buying a stock that's not consistently profitable? Okay? If they have dividends and the dividends are consistently going up year after year after year, well, great. That means they're profitable and they're profitable and they're profitable. Okay? If they decrease their dividends, well, that's a portion of their profits. If the profits are going down and they decrease them, fine. Well, I no longer want to look at them. Gaps have a tendency to fill. You're absolutely right. I don't see any gaps recently. Well, we have this gap right here. We have this gap right here at MRK. Okay, so here's our bottom. Very slow to the upside on MRK, which is fine. I like slow growth. Slow growth is excellent for dividends, for covered calls and spreads. Time to grab a few puts on better. Okay. Cormedics. Never even heard of Cormedics. C-O-R-M-E. Cormedics Incorporated. Yeah, no, sorry, dude. Cormedics is a monthly optional stock. Monthly optional stocks just don't pay the same. It's going to be a no. Larissa, no, you just need 100 shares. Do you ever sell cash secured puts or only covered calls? All right, Lost Cracker. Interesting question, good question, valued question. Now, I like cash secured puts, but here's the thing. On this channel, this particular trading strategy, I do not go over cash secured puts, okay? The reason being is I teach the exact same strategy I taught my daughter 15 years ago. Simple, safe, predictable, consistent. Let me say it slower so you can understand the very first 2 things I say. Simple and safe, okay? Now, puts have what's called obligations attached to them, and they can be a little confusing to some people, okay? Do I buy a put? Do I sell a put? Do I buy a call? Do I sell a call? Okay, I want to make it as simple as possible. Simple, safe, predictable, consistent, no way to lose. So when I taught it to my daughter, there was a couple of rules that run along with it to make it easier. Okay, once we took a look at the stocks we liked. Now, the stocks we liked are very simple. The Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. Those 5 lists right there will give you over 300 companies that have consistently increased for 20 years or more and have weekly options. Weekly options are very important to me because I want weekly cash flow. Okay, and it's always, always, always about the numbers. Yep, some stocks don't have options. Charlo. Even stocks with good 20-year dividends bounce up and down. Amazing. Yeah, well, that's what I'm looking for. Neil! Say you buy X. One thing I don't like about YouTube, Okay, the question pops up on the screen and then disappears. Say you buy ExxonMobil at 108. XOM. Okay, so hypothetically speaking, if I bought ExxonMobil at 108, and right now it's at 114, I'd be kicking myself in the ass for not selling it at 120, 119, 120, 120, 120, 121. All right, so what did it do? It went up, it went down, it went up, it went down, it went up, it went down, it went up, it went down. How can you not see? If you got it at 108, way over here, last time it was at 108 was in June. Okay, from 108 she jumped up to 117. Why the hell didn't you sell it at 117? You got to keep one thing in mind. It's not a profit until you take it. Nobody ever went broke taking profits. So hypothetically, if you bought ExxonMobil at 108, well, my question is, why the hell haven't you sold it? That's my question. Okay, you didn't marry it. I was going to say you didn't buy it, you married it. Okay, so if you buy something and you don't have an exit plan, you're just married something else. Even stocks get startups sometimes pay crazy dividends. You're absolutely right, they do. Okay, yeah, but Neil, I have no idea what you wanted me, how you wanted me to answer that. Okay, you said let's suppose. Yeah, okay. Does the market maker set the low price too? No, no, no. Judy, all right, Judy, that's an excellent question. Does the market maker set the low price? No, 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 no. The market maker sets one price and one price only. Okay? No, no, no. I did not tell you to sell it. I said I would have sold it. That's what I said. I don't give suggestions. I don't give advice. I'm just saying. If I bought ExxonMobil at 18, okay, that would be back in June. As soon as I saw it hit here, I would have been out. But that's me. All right? Everyone's different. And what was I getting at? Yeah. Hey, yeah. How are you today? Please, sir. Are you from the UK? Bloody hell, no, I'm not from the UK. Sort off, you bloody wanker. I had a friend of mine, she came over, and she talked to me, and it's like, you guys just talk so cool over there. The market maker pricing. Let's get to the market maker pricing. Okay. Now, this mess here, okay, high, low, all that kind of nice, neat stuff, that we figure out. The market maker, okay, the market maker, he is the one who basically, let's call him the person who draws the line in the sand, takes the starting pistol and says, all right, we're starting here, go. That's all he does. There's only one price that is controlled by one person and one person only. That is the opening price of the day. The market maker sets the opening price of the day. Everything else, well, that's you and me. Okay, once the market maker sets the opening price, we decide, is it too high? Is it too low? Should we get in? Should we not? We push it up, we push it down. But the market maker, he's the one who draws a line in the sand and says, go. So, got a couple more questions over here on YouTube. It's a trader, right? ExxonMobil. Okay, right. Okay, all right. Hopefully that answers the question over there. You just married TP Mercedes. I have no idea who TP Mercedes is, but I hope she's a nice person. Doug. All right, Duran, RR. Is that rate of return or is that a stock called RR? Reichard Robotics. No options. That's going to be a no. I have a trailer load of Whirlpool right now. What's the name of your YouTube again? The 10-minute trader. Okay, so let's go quickly. If you come up to, if you go to my bio, you should be able to find, there's my splash page right here. Well, the 10-minute trader. Here's the 10-minute trader right here. See? The 10-minute trader. Simple, safe, predictable 1% per week. Look at this. Live nightly training, 9 p.m. Eastern Standard Time. Right here, live trading. If you guys want to join me on my live trading group in the morning, Monday through Friday. Okay? Dividend Stock Talk on Patreon. Let's get back to here. Now, the 10-minute trader. Here we go. Here's my YouTube channel, Twitter, Facebook, Instagram, podcast, LinkedIn, Patreon, and books by James. Cool, look at that. James has written some books. I've written 14 so far. Kind of weird, but hey, it is what it is. Oh, wait a second. What are we looking at? Yeah, YouTube channel. Okay, YouTube channel, you ready? The 10-minute trader. And there's a picture of me right there. And look, we got 2 live broadcasts. Oh my goodness, I look terrible from the side. Okay, there's the live one right there, and this one's live also. Let's get out of that. You guys don't want to see that crap. All right, let's go back to here. All right, so RR, sorry dude, that's going to be a no. Yes, Duran, look up research. It looks good. All right, Duran, I'm going to say no. Now, it may be great for somebody like you. Now, when I say somebody like you, apparently, from what I can see by some of the questions you've been asking, you're not retired. You're not looking for cash flow. You're looking for capital appreciation. You just might be in the wrong place. Okay, this is not capital appreciation. I do not buy a stock for $1.32 and wait for it to go up to 5, 6, 10, 12, 20 bucks. I don't do that. Can you speak? Oh, can I speak up? Oh, sorry. Yeah, I don't have my microphones. I usually keep them on my lapel, and the microphone's at the top of the computer, so when I'm pointing to the other direction, sometimes you can't hear me. And I got the air conditioner going too, because it's a little bit warm here, because we are in Florida. All right, Duran, PG, Procter & Gamble. Procter & Gamble. Judy, I'm looking for cash flow so I can leave corporate America now. Well, Judy, I could suggest you drop me your phone number, okay? DM me your number. I'll give you a call and see if this is right for you. It's not right for everyone, okay? Because you never know. How much do you have available? What's your risk factors? What are your plans? How much time can you commit to it? A lot of interesting questions, Judy. What do I think of Alcoa and the American Airlines? Well, alrighty then. Joe, give me a few minutes. I still got 56 more questions to go. Holy cow. You guys keeping me busy. Larissa, do you use more than one Think or Swim workspace setups, default options? Well, of course I do. Okay, see right now you're looking at three different accounts. 1, 2, 3. Okay, all of them are different. Duran, patience, I'll get to it. Wade, gotcha. Your thoughts. Wade, I like Procter & Gamble. I have a call for this week. 172.5. Okay, Duran, I'd kind of like to know what the hell you're thinking when you got 172.5. This thing hasn't seen 172. What's the highest right there? So you're an option buyer. Nothing wrong with that at all. You're just in the wrong group, dude. I don't buy options only because you bought the 172. Right now, the 172.50 is going for 24 cents a share. So your break even at this moment in time is 172.74. Okay, 172.74. Ace, how are you? Oh, Ace, please don't start that nonsense again. So Duran, when you buy a call option, which looks like what you did, right, you're looking for the stock to go up higher, which I'm kind of uncertain as to why you would do that. Okay, yeah, nice run up. Okay, but what you're missing is a year ago I could have bought it at 142. Now it's at 170. That's a $30 increase. A $30 increase on a $140 stock. That's 22, 23% increase. So here's the question. If I bought it here and it's up 23%, I'm the kind of guy who'll jump out at 5% because it ain't a profit until you take it. Okay, look. Up, down, 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 up, down. Okay, it never hit 172. Why the hell would you buy a 172.50? And what makes you think it's going to go to 172.50? Let's take a look at seasonality. What does it normally do this time of year? Well, here's where we are. And that is almost plain to see. Take a look. Okay, here's the blue dot. This is what's today. Okay, for the next couple of weeks, she's going to go a little bit to the downside. Now, I understand that the seasonality chart is just historical performance. It doesn't dictate what it's going to do. But if a stock normally goes down at this time frame, well, I'm not looking for it to go higher if it normally goes down this time of year. Now, Procter & Gamble, they don't come out with brand new products every year. They don't say, hey, we got this new product and the stocks go up. No, 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 no. Procter & Gamble's been around over 100 years. They're a dividend king. They've increased their dividends for 5 decades or more. Okay, I'm not looking for them to jump up anywhere. I'm looking for them to stay flat. So I have no idea why you would have bought that. But okay, I don't tell people what to do. What's the name of your YouTube channel? We already did that one. Carlo, is it easy to set up a trade and sell automatically once it hits a certain stock price? Oh, too easy. Yeah, you like that one, Neil? Carlo, you could, but it always depends on what it is you're looking to do. Okay, there's so many different trading strategies. There's so many different opportunities. It depends on what you're looking for. Duran, option price is lower than 1%. Yep. Duran, did you buy or sell the call? Bought the call. Yep. I have no idea why he did that. Duran, okay. I doesn't buy calls. He only sells calls. Judy, does a Dividend King list change throughout the year or is it established every January? Judy, that's a good question. The Dividend Kings list, think about this for a second. The Dividend Kings list are all the companies that have increased their dividends for 5 decades or more. So it's a consistent list. So companies are added to it every year, and every once in a while a company drops off. As a matter of fact, Yum Brands, YUM, used to be on the Dividend Kings list. It dropped off because they dropped the dividends. 3M was on the Dividend Kings list for over 6 decades. 60 years of increased dividends. And this year they decreased the dividends, so they got tossed off the list. Yes, you're right. They did drop off. I looked up the list today and it was worked. Okay, wait a second. Yeah, so the Dividend Kings list changes, updates. Doesn't change, it updates every year. Lou Bill, do I have a course? I'm working on the course thingy. That's why you asked. Hey, have a nice day. Thank you very much. Duran, we looked at Procter & Gamble. Uh-oh, I missed all these questions. How can I miss all these freaking questions? Here we go, here we go, here we go, here we go. Explain settled funds on a cash account, please. Well, that's kind of self-explanatory. Because when you buy and when you sell, they have what's called a settlement time frame. Okay, somebody has to dot the I's, somebody has to cross the T's. Settlement basically means, well, we're working on it. Dude, it's not even $1. Tonight's one-liner winner. Okay. Explain settlement if I already did that. Hello from Los Angeles. Hey, you should check out with Hollywood. LA Sound Waves. He's over in that area too. Is this strategy you are using here the same as Dividend Capture 2.0 strategy? Yes, it is. It's strange because I'm the one who came up with Dividend Capture 2.0. Explain settlement funds. Okay, I did that. Explain that I already did that. Okay. Sounds like Neil. All right. I'm in Hollywood area too. Hey, Hollywood. Judy's over there also. And someone else is over there. Whole family sounds sick. The whole family's smoking. Not just me. Thoughts on UVIX? Bought some this afternoon. Just Drew. Haven't heard from you in a while, just Drew. UVIX, huh? Can I ask why? UVIX. 2X long future ETF. Interesting. Okay, double interesting. All right. Let's take a look at how often UVIX has increased their dividends, or do they even have them? UVIX. Sorry, dude, there are no dividends at this moment in time for UVIX. That's going to be a no. Jim Bibby, how are you doing? Back again. James, I settled up a Thinkorswim account. Can you please walk me through how you get to the seasonality chart? Well, Jim, glad you asked. Simple, easy breezy. Okay, are you ready for this? I forget what song is that. Are you ready for this? Okay. First thing you want to do, Jim, you see where your chart is right over here? Okay. When you put your stock symbol in, the very next line, that very line where the stock symbol is, okay? Come over, slide over, slide over, slide over, and right there where it says Style, click on Style. A drop-down box will open up. You come down here where it says Chart Mode. Another drop-down box will open up. There it says Standard, which is what we're looking at. Down the bottom right here, it says Seasonality. There you go. But once you're onto the Seasonality chart, come up here where it says where the D is, right next to Style, see the D? You click on that, and that gives you your time frames. 10 years, 1 day is what I like. I like looking at 10 years of data. Now, you can always do 1 year, 1 day, 2 years, 1 day, 3 years, 5 years, 5 years, 1 week, 5 years by the month, 10 years by the month, 20 years by the day, and 20 years by the month. I like it 10 years, 10 by the day. I like to look at daily chart, 10 years worth of data. Okay, hopefully that worked out for you. 86 wants to take a look at Dow. Dow, D-O-W. All right, the high, the low, where was it, where is it, blah, blah, blah. 52.79. 52.79, the current price. The 53 for this week, about 0.5%. No thanks. 53 for next week, 47 to 52, not 1%. Terribly sorry, Dow does not cut it this week. Now, I like Dow, don't get me wrong. I like Dow, just not this week. Okay, it has nothing to do with the chart. It has to do specifically with the numbers. What am I getting? Am I going to buy the Dow at 52.79? They sell it at 53, not get 1%? No, there's too many other good companies just as good as Dow that gives me the 1% that I'm looking for. Rivian does not have 20 years of increased dividends. I know that. More questions. Judy, I started working with Thinkorswim and found it overwhelming because there's so much. Yes, Judy, you are 100% correct. But you know what, Judy? Remember I asked you earlier if you really want my assistance. I don't charge you for the assistance. I like helping people. Yes, it is true. It's specifically designed to be overwhelming. Okay? Give me a call or send me a text. I will call you. I will walk you through how to set it up. It's actually very simple. Or am I being an adult? Yep, adults have a tendency to make things complicated. But you don't need everything that's on there. They have so much stuff on there, it's just unbelievable. You know, I've been trading with this platform for over 20 years. And and I'd have to be, I'm being honest with you guys, I don't even use 1 or 2% of what they have available. 90% of what's on Thinkorswim, I have no clue. I have no clue whatsoever. Here's Forex trading. Clueless. Futures trading, clueless on that one. Active trading, peers trading, education, tools, okay? All this stuff I can go into. Market watch, quotes, alerts, visualize. Oh, see? There's a lot of stuff on here I am totally clueless about because it has nothing to do with what I am doing. So I like to do what I am doing and only what I am doing. I have no desire to look at all that other stuff because all that other stuff, to me, is just clutter. It gets in my way of what I want. Okay, I don't want to be on the computer all day long. Just Ribbon doesn't pay dividends. I don't look at dividend stocks. Thank you very much for that. 86. Thoughts on AMD? AMD. Is that Archer Daniels? AMD? AMD. Advanced Micro Devices. Yeah, Archer Daniels is a yes, which is ADM. AMD is not. Neither do I. Okay, you're welcome. All right. AMD, Advanced Micro Divisions. AMD. Okay. Advanced Micro Divisions. There are no dividends for the time period selected. No dividends, AMD, that means no. Wildcat Sam, dudes, about time you get here. We're about ready to be done. All right, what was the last one? AMD. Ooh, Jess wants to look at CVS. I like CVS. You know what we haven't done yet? We haven't done Cisco. Cisco was the very first one we asked today. Before I log off, but went up. Can you check AA and AAL before I log off? All right, Joe, we'll take a look at those. Because I actually like Alcoa and I like American Airlines. CVS. High, low, where was it, or is it, blah, blah, blah. All that's neat, fun stuff. The last 30 days. Here we go. 30-day high, 63.92. 30-day bottom, last Monday. Cool. We got, what was that, 6 days to the upside on CVS? Check that out. Bottom out at 55.60. Nice 5 days to the upside. 58.90. So the 59s for next week, almost 2%. This week's 59s are right at 1%. Okay, fine. Both of them work for me. Right? Alcoa. AA. All right. High, low. Where was it? Where is it? Where is it currently going? Last 30 days. Here we go. Interesting. Now, I'm going to say no to Alcoa. Okay, not that, no as in I don't like it. How about not this week? Now, Alcoa, I'm actually going to write down for 2 weeks from today because, number one, I like Alcoa. Okay, so I'm going to put it with Nike and Starbucks for 2 weeks. Now, the reason why I say I want to take a look at it for 2 weeks, oh, I missed that question. Sorry. How do I DM you through Instagram? You'd be probably better off to DM me through TikTok or Instagram, either one, because I got YouTube, TikTok, Instagram, and Facebook running at the moment. My other TikTok channel's not working. So the reason why I'm saying no to Alcoa for this week and why I wrote it down for us to take a look at in 2 weeks, because I like Alcoa, number one. Okay, here's our 30-day high. She dropped, here's our 30-day bottom. Beautiful run up. And look right here. Is she starting to turn around here? Okay, because today was a down day. But look at the 30-day high. It's like, why would I want to jump in when there's not that much room left to go unless I think it's going to go higher? And I don't like that game. I don't like buying it at the high and hoping it goes higher. Because that's what they do. They go up, they go down, now it goes up again. Well, at what point is the profit taking going to start? Because 30-day bottom is at 27. So it went from 27 to 33. That's a $6 increase. A $6 increase on a $27 stock, that's a 20% increase. So she goes from here to here, that's a 20% rise. So yeah, there's going to be profit taking. So I'm going to say not this week for Alcoa. Okay, American Airlines. Interesting, 1029. Here's the high, here's the low. It's where it was, this is where it is. Last 30 days has us going something like this. This is going to be another tough one, and the reason being, look, here's your 30-day high, your 30-day bottom. Look at the run up to where it is now, and today was a pullback. Okay, so from $9, where's that bottom? $9.07 to $10.29. That's only like a $1.20 move. But a $1.20 move on a $9 stock, well, that's over 10%. All right? Think of the numbers. Don't look at, okay, don't look at, well, from $9 to $10. It only moved $1. Yeah, but that's a 10% move. Okay, I'm looking to get 1%. I like a 10% move, especially when I'm looking for 1%. So it's at $10.29. The 10 for this week is going for 33 cents, but you lose 30 cents off the top. That's a no. Next week is going for 42. You lose 30, you get 12 cents. That's over 1%. So it's not the greatest return. Okay, there are other stocks that we looked at this evening that had better returns than this one. But if you like American Airlines, fine. Okay, this is actually the low of the year. And take a look at this gap. Gaps have a tendency to fill. But look where it is. It's starting at 12.20, and we're at 10.20. So we had $2 to go, and $2 on a $10 stock is a 20% increase. You get a 20% increase, you're going to have profit taking. You get profit taking when the stock's going to drop again. It's going to be a while before that gap fills. Hypothetically speaking, going by the numbers. And I'm a numbers person. Because 1 plus 1, no matter where you come from, is going to equal 2. What was that last one? All right. Eli Lilly calls, baby, let's go. I lift the Eli Lilly's out of my price range. Do you trade futures? No. What percentage do you normally look for? 1% per week. Brian, X. Ooh. So I don't know if you're talking about Twitter or if you're talking about U.S. Steel. Too close to the 30-day high. Got it. Well, that's for me, Joe. I can't, it's not advice. That's just my opinion. Okay, so I got to make you guys understand. I do not have any licenses other than the license to drive. Okay, I'm not a financial planner. I'm just some guy reading numbers to you. Okay, and I can get a third grader say, oh yeah, AAL bid, it says 1029, ask says 1030. I can get a third grader to do that for you. It makes sense though. Thanks, Joe. And there are a lot of, okay, Joe, you've been here long enough. You've seen us look at a lot of good companies that are paying better than this is paying. MGA CSX. Okay, Brian, let's take a, I'm going to write X down. I'm going to take a look at Cisco because it was the first one we were asked tonight, and we haven't even looked at it yet. Funny thing, it's Cisco, CSCO, not SYY, because it's two Ciscos, Cisco and Cisco. Big difference when you look at Abelmo. Yep, you're right. All right. CSCO. Cisco 5034. Yeah, it's going to be a no for Cisco. And that was a quick one, too. The reason being, take a look at this. Okay, here's your last 30 days. 30 days ago, at 47, she jumps to 48.50, drops down to 44.50. Look at this big gap up, and now we're here at 50.24. Yeah, this has profit taken all over it, and got this big space right here, which has a tendency to fill. So Cisco's going to be a no. Let's take a look at U.S. Steel. You know what? Let's be done with that and just finish up with the questions. MGA Div. What the heck is MGA Div? MGA, no. Sorry. Sorry there, Grill Bit. Can you look at DXY? What the heck is DXY? DXY. Yeah, sorry, dude. I don't do cryptocurrency or Forex. TP Mercedes was my bachelor party last night. I wasn't invited. Oh, dude, I'm insulted. How are you today, dude? Thoughts on Tesla? Albert, I don't do Tesla. Tesla is one of those companies that do not share their dividends, so it's going to be a no. Wow, a lot of questions here I missed. Okay, no front, blah, 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 blah. Good evening, fascinating football videos. Dude, really? It's 11:30 and you're just showing up. Would you ever do a long call and able mile at this moment? No. I've learned my lessons doing calls, buying calls and buying puts. You know what they say, burn me once, okay, burn me twice, and it's my fault. I forget exactly how the saying goes, but I don't buy calls anymore. I don't. Okay, that's a risk. Then I have to wait for it to move up, and I don't like that. Shay, has trading lost excitement and wins and loss becomes kind of a non-emotional for you? I don't really get excited that much anymore. Well, remember, I've been doing this for 20 years. I mean, I like it when I win, and I'm happy for people when they win. Okay? But I do it every week. So it has no more excitement for me. Dottie Vanderwalt. Oh, it's just scary seeing the max loss when doing a covered call versus a long call. Well, they do that because they want to save their ass, so to speak, and let you know that anytime you buy something, there is the chance it could go to zero. Now, when I say no risk trading, I look at it in a different manner than most people, because the way I look at it, the stocks that I do, most of the companies that I invest in have been in business for over 100 years. Is there a chance for Coca-Cola to go out of business? Well, yeah, there's a chance. Okay? There's also a chance that you might believe that magic bullet bullshit. Where you shoot a bullet and stops in midair, turns 90 degrees, goes 3 feet, turns 90 degrees again, drops an angle down, pauses for a couple seconds, and then goes forward. If you believe that shit, that magic bullet shit, I don't even know how many people here actually know what the magic bullet theory is. They say, hey, Kennedy got shot by, but what's his name? Yeah, the magic bullet. Anyway, yeah. All right, where was I? What do you think about selling options on Alibaba? Well, I had Alibaba at the beginning of the year, but it didn't fit into the parameters and didn't work out very well. How to learn about chart reading? Mehesh, that's easy. So with that theory, though, why is a long call and able mile not something you would do? ALB. Okay. So, hypothetically speaking, Joe, you are 100% correct. A call option on able mile at this moment in time might be a good idea, but what are you doing? 1 week out, 2 weeks out, 30 days out, 60 days out, 90 days out? And then what am I doing? So let's say I go 90 days out. October. So wait a minute. Yeah, October. Okay, right now it's at 84.22. Okay. Well, if I buy the 90s, okay, I do the 95s. Now that's way up here, the 95s. Well, that could be for 90 days, 95s. Okay, but I'm paying $3.45 for it. Okay, so the 95s right here. So my break even, right, would be 98.45. Okay, the cost of the strike price, the 95s, plus the cost of the option, $3.45. That's my break even. So in order for me to do that, well, I want to double my money. So now my exit is going to be 95 plus 3, 98.45, 98.45, 91, 91.90. Okay, so, sorry, 101.90. So if I bought the 95s, right here, for 90 days out, okay, the stock is going to have to go to 101 for my target. So as all that space right there in 90 days, no thanks, it just doesn't work for me. Okay, and then I'm looking at every single day, the time value decreases, decreases, decreases. It's less predictable, more of a gamble. Makes sense. This is why I only do selling options, because no matter what happens in the stock market, the stock goes up, the stock goes down. One thing that happens consistently that there's no control over whatsoever is the tick tock, tick tock, tick tock, the time value. Okay, if I sell an option on Monday, okay, by Friday, 5 days have gone by on time value, and time value is one of the major components that make up an option. So an option price has a bunch of things in there. Well, one is time value, two is current stock price, three is the strike price. So you get strike price, time value, strike price, time value, stock price, and then they throw a bunch of other stuff in there. Interest rates, volatility, stuff like that. It's called a Black-Scholes pricing methodology of options. And it's a huge mathematical equation. But if I'm buying the 95, okay, for $3.45, my exit is going to be 101.90. That's a big jump between the 95 and the 101. So that's like $6 of miscellaneous crap just for me to make my target. Yeah, I don't like it anymore. No. Years ago it was a yes, now it's a no. All right, Jim Bibby. Oh, it's not 11:30. So let's go through the last questions and that'll be it for the day. How to learn about chart reading. Chart reading is simple. All right, let's do this really quick. Mahesh, you ready? Chart reading is simple. Let's not make it more complicated than it needs to be. Now, I like looking at 5 different charts. Let me show you all 5 of them and show you how they're all basically the exact same. Same. Yeah, you like that? Okay, this is a 1-year chart. 1 year is, well, 1 year. To the far left was 1 year ago. Okay, today is August 20th, 2024. Way over here to the far left, August 20th, 2023, exactly a year ago. Okay? It's easy to see. So here's your high. Okay? Here's your low. This is where it was way over here, and this is where it is now. That's 1 year. See how it goes down and it goes up and then down, up, there. That part is easy to see. Next, let's take a look at a 90-day chart. I'm looking at the exact same thing. The high, the low, where was it 90 days ago? Remember, this is a 90-day chart, 90 days ago. Where is it now? Because this is always here on the far right, that's always today, or the closest one today. All right, now that's that one. Now, let's get a little closer, the last 30 days. The exact same thing, last 30 days. Where was it 30 days ago? Where is it now? Where's the high? Where's the low? That part's easy. Next, it's a little bit more complicated, but yet not that difficult. Now, this looks like a candle. Each one of these represents 1 day. Okay? 1 day, 1 day, 1 day, 1 day. Now, green represents an up day. Red represents a down day. Okay? Up day, down day. So let's take a look. Now, this is what's called a candle chart. Okay? Look at the little wick. There's a wick at the top. There's a wick at the bottom. Okay? The 4 things you are looking for on a day chart. Actually, there's 5, but I'm going to show you 4. The top of the wick is the high of the day. The bottom of the wick is the low of the day. The top horizontal line is the closing price of the day. The bottom horizontal line is the opening price of the day. Okay, that's for a green day. A red day or a down day is kind of the same but a little bit opposite. So let's take a look at this one way over here. Okay, the bottom of the wick is the low of the day. The top of the wick is the high of the day. Now, with a down day or a red candle, the top horizontal line is the opening price of the day. The bottom horizontal line is the closing price of the day, which means it opened here, it closed here, it was a down day. Okay? Open, close, down day. High, low, always the same. Okay, now let's take a look at a bar. That's a bar. Let's look at a bar chart. Okay, bar chart, almost the same thing, just a little bit different. The top of the line is the high of the day. The bottom of the line, the low of the day. Okay, the horizontal line on the left is the opening price for the day. The horizontal line on the right is the close of the day. Open, close, high, low. All right? Same thing with the red. On the left side, horizontal line, the opening price. Horizontal line on the right side, closing price. The top of the wick, high of the day. Bottom of the wick, low of the day. Okay? Simplified chart reading. It's really not that difficult. Try not to make it more complicated than it needs to be. All right. Next question. How do you find stocks with 1%? Mahesh, that's easy. First of all, you need to weed out all the other companies that aren't worth your time and effort. For me personally, just for me, you've got to figure out what stocks are good for you. Okay, you might like Tesla. You might like Costco. You might like, those big expensive stocks. Fine, great, wonderful. I have certain criteria for where I put my money. Number one, it has to be consistently profitable. That's number one. Consistently profitable. 20 years of increased dividends. Okay? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. That's 5 lists right there. Go to Google and you put into the Google search Dividend Kings list 2024. Dividend Aristocrats list 2024. And they all pop up. They're right there. Simple, easy, free. Tesla for me is a no. Okay? How do I find stock? Yep. How do you split up your buys? Percentage or dollar of numbers qualified stocks that week? Simple. Simple, simple, simple. If I'm doing 5 stocks for the week, it's 20%, 20%, 20%, 20%, 20%, 20%. If I'm doing 4 stocks for the week, it's 25%, 25%, 25%, 25%, so on and so forth. Ever use a stock scanner to find stocks that hit a 30-day low? You can also tailor for weeklies. Brian, you're 100% correct, but that's not how I do my trading. Okay, I honestly really don't care what a stock scanner tells me. What I'm looking for specifically Brian, what I am looking for now, stocks move for 2 reasons, a known reason and an unknown reason. If I know when it's going to go up, doesn't it make sense to buy the stock then? Well, if the stocks, specifically dividend stocks, the ones that I like, have a tendency to increase in value before the dividend is paid. Each one of these little green dots on this calendar represents a stock. British Petroleum, IBM, Siri, Visa, Wells Fargo, Kinder Morgan, Ford, Intel, Kroger, ExxonMobil, Emerson, Hershey's, blah, 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 so on and so forth. Okay? If, by chance, a stock goes up in value before it pays its dividend, okay, I like to buy it 2 weeks before the dividend on a Monday. Okay? I do all my buying on a Monday. Friday at 3 o'clock, I take a look and see where they are. Are they good? Are they bad? Do I have to do this? What do I have to do? It's actually not that difficult. All right, how do you only do options on stocks with a 1% premium? Absolutely. Why would I want to invest in something for less than 1%? Nobody likes to buy high. Well, actually, some people do. Drazik, holy cow, Drazik. I'm usually done at 11:30. It's 11:44. You have a shot in the dark that I'd even be here. How you doing there, man? ExxonMobil, we already looked at ExxonMobil. Thoughts on Occidental Petroleum, OXY. OXY. Okay, here's our high, here's our low, here's where it was, here's where it is, blah, 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 yada, yada, yada. 56.78 is the current price. We're looking at the 57s. The 57s for this week, 17 cents. Hell no. Next week's 57, 47 cents. Hell no. Sorry, Occidental Petroleum, the numbers just don't work. Is Intel good long term? Okay, TikTok King, you're under the impression that I like to buy things and hold them. No, longest I've ever held anything is 9 months. Now, I haven't been trading for a year or so. I've been trading for over 20 years. 20 years. Longest I've ever held anything is 9 months. So your idea of long term, definitely not my idea. Okay, Amrit, S&P 500 target year end. No, I don't do the S&P. Sorry. Good evening, Hassenpfeffer. Right now, I like Rio. Okay, come on, man. U.S. Steel. Brian, U.S. Steel. I like U.S. Steel. 37.95. The 38s are going for 40 cents this week. Cool beans. Next week's 38s are going for 27. What the hell? That's the first time I've ever seen that. Okay? This week's 38s are going for 40 cents a share. Next week's 38s are going for 27 cents a share. How can that be? 27 by 219? Yeah, something ain't right there. But anyway, U.S. Steel. I got to change this. That doesn't look right. Okay, U.S. Steel a year ago, 31.93, bottomed out at 29.84. That was a year ago in the end of August of last year. We topped out at the end of December at 50 bucks. Well, look where we are now. Here's our last 30 days. Take a look at this. It looks very enticing. Okay, 30 days ago, we're at 37, 38. She jumps up, pulls back, jumps up. Look at this pullback. I'm going to put U.S. Steel down for next week because I want to find where the bottom is. It's going to turn around and go back up. Well, the 38s for this week, yep, lovely. 38s for next week, well, we'll see. So I'm putting U.S. Steel for next week. All right, that's U.S. Steel for next week. All right, all that being said, we're going to call it a night. All right, it is almost midnight. I turn into a pumpkin. It's not a pretty sight. You guys have a great night, and I will see you again tomorrow. For those of you in the morning trading group, I'll see you first thing tomorrow morning. Other than that, I'll see you guys all tomorrow night.